All right, guys, by now you've seen a number of companies on this stage here at PDAC, but we've got one more for you. It's LaFleur Minerals. That's right, Minerals, not metals.
Yep.
And sitting with me is Paul Ténière, who leads the company. So, Paul, thank you for being here, spending the time with us.
Great to be here.
One thing that you say in your own words, it's that you're in a very well-endowed region.
Yes.
Tell us more about that. What makes it so well-endowed?
Yeah, so we're in the Abitibi gold belt in eastern Quebec. It's a very famous area for gold mining. Lots of majors there, including Agnico Eagle, Endeavour, lots of mining. Multiple millions of ounces of gold have been mined in that area. The area that we're in is the Swanson project is up to the north of that, about 50 kilometers north of Val-d'Or. And we acquired that project a few months, I guess almost a year ago now. And it was a project that Agnico had looked at and Monarch Mining had. And it was a small deposit, around 200,000 ounces of gold. We took it on and now, but we're looking at consolidating the entire area. And so far we've got 150 square kilometers of ground. And so we're looking mostly at gold and all different targets throughout that area.
Right, and specifically two gold assets. One that is a near term in terms of being at a producer level. Can you go into a little bit more detail about that as well?
Yeah, so that's kind of, I guess, what makes us a little bit unique, and a lot of junior exploration companies just sort of have an exploration project. We also had the opportunity to put a bid in on the Beacon Gold Mill in Val-d'Or. This was also an asset that Monarch Mining previously had before they went into bankruptcy. So we were in the right place at the right time, and were able to bid on the mill, and we were successful in getting the mill. The mill, we're very lucky in the fact that the mill, there was nearly $200 million spent by Monarch to refurbish the mill. It's a mill that was originally built in the 80s, but is recently refurbished for their project. And the mill's been on care and maintenance since early 2023 when they shut it down. So right now we're looking at bringing in the Swanson project, advancing the Swanson project, and that potentially being a source of ore to bring to the Beacon Mill, which is only 50 kilometers to the south by road. And we're also looking at other opportunities, custom milling, other projects in the area where they might want to use a mill such as ours. So our mill is capable of producing 750 tons per day, but could go up to 1,000. It's a smaller mill, but there's lots of good projects, sort of mid-level projects that would be able to take advantage of a mill like ours.
Well, with Swanson, what are exploration plans looking like? What is the drill strategy there?
Right, so we spent already a fair bit of time on exploration since we acquired the project. We've done prospecting, we've done soil chemistry and soil surveys. We've also done geophysics. And right now we're in the process of finishing a ground geophysics program, and then from there we're going to have multiple drill targets. It'll be mostly focused around our Bartek and Jolin targets, which are to the south of the Swanson project. And but we're looking at least 10,000 meters of drilling, starting probably this spring and into the summer.
This is always a delicious question, but I want to understand what near-term catalysts are out there for LaFleur, and what value increase there may be as well.
Yeah, so there's upside value with Swanson in the fact that we're already at around 200,000 ounces of gold. We have historical resources on the other projects to the south. They older estimates, so we're going to drill to bring them up to the current codes and current best industry practices. But we easily could see this going to at least a million ounces on that. So there's that aspect of it. And then on top of that, as I said, with Beacon Mill, there's the possibility of, in the short term, becoming revenue generating with the mill, and that would help pay for a multitude of things. But that's our goal, is to get the mill back up and running, which we're in the process of trying to do now. We have experts in looking at the types of maintenance and repairs that we need to do to get the mill back up and running, and we're looking at a very short timeline for that. So, and we're not talking about hundreds of millions of dollars to get the mill back up and running. We're talking about maybe a few million, and also a very short time frame, 8 to 12 months or less.
How is it possible that it's so low cost compared to what you may expect?
Well, because the mill was refurbished by the previous operator and nearly 20 million spent. And as I said, the great thing was when the mill shut down, they put it on a very good care and maintenance program. They really have really maintained it ever since it closed 2 years ago, nearly 2 years ago. So that's one of the biggest advantages. And so literally when you walk into the mill, it's as if, the workers just sort of stepped away, but the lights were on, the heat was on, everything, and we've kept up with all the environmental monitoring. So they did a very good job of keeping the mill in good shape. And so that makes it very good for us if we're going to put the mill back into production.
So the company is $15 million market cap and has a tight share structure. Can you explain to the audience what makes it tight?
So the company was founded by Cal Malley out of Vancouver, and he's our chairman. And he initially constructed the idea of building this company, and he's a large shareholder in the company. So it is tightly held, and there's also close contacts with Cal and some of the close investors that are involved in the project. But we are looking. We recently did flow-through financing for up to $3 million. So we're getting a lot more on the retail side that are coming in, and we're looking to continue that trend. So,
well, thank you again for your time.
Yeah, thank you very much. Appreciate it.